even more your own trading results. So thanks again for being here. And let's get the show on the road. So today we'll be focusing on moving averages with more depth, as I poetically described. And this webinar, as you know, is hosted by Admiral Markets. My name is Chris Forsick. And before we start, the usual risk disclaimer. Please read through it carefully. But in general, you should be aware that this webinar is meant for educational purposes only, and no trading advice or recommendation should be derived from this webinar. Okay, so thank you for your attention on that. So just a quick heads up for those of you who are not aware, Admiral Markets in the social media, you can follow them, for example, on Twitter. I have here an example ready, so you can add Admiral Markets, and then you can follow all the news up to date as it goes along. All right, so that's pretty handy. Facebook too. All right. For those of you who don't know yet, there is a great contest going on, so you might want to take a look at that. That's always cool to do. And some cool features for those of you who don't know that, you can buy and sell directly from the platform. There's great market depth and spreads, so something to look into for sure if you are already not a customer of or a trading with Admiral Markets, I should say. All right, so that's some cool stuff there. And now we can move along, of course, to our goal of today, the goal of the webinar, moving average trade plan explanation with some extra tips. All right. There's a bit of a double word there. But, yesterday, for those of you who were there, we went through a trade plan on moving averages, but today we're going to make it a little bit more juicier. We're going to add some explanation why such a trading plan would work. We will repeat the trading plan itself for those of you who are not there, and we're going to give some extra tips with implementation as well. So today's agenda is a nice summary of trading philosophy, design plan, and then some risk management and extra tools. All right. So before we start, before we get going, I normally like to ask some questions so that I have an idea who we have in today's webinar. And I was just wondering if you have time to type something on your keyboard. If not, then no problem. Maybe you're multitasking right now and only want to listen in. That's no problem. But I'm just curious if you use moving averages for your analysis or your trading. And if so, let me know which one. And if not, why not? I'm just curious what your opinion is on moving averages and if you use it in your trading plan and if you think they're important. So a lot of questions, maybe too many, but if you want to pick out one, like for example, do you use them? It would be really cool to know who is attending and actually uses these. So I have some interest here. One person is saying 1 hour, I think. Cool. Another person doesn't, because it says it's difficult to predict. Okay. The other one does use it for price action. All right, I got some yeses here, very important even. And one uses it for exits. Cool. All right, interesting. So most of the people I can see are kind of using it as a guideline for trends or exits or etc. Maybe not necessarily as an entry, but especially for directional guidances. Cool. Yeah, great. Thank you for all your answers. That's really awesome. So I can see that maybe this slide isn't necessary because here I'm going to actually explain why I think moving averages, and probably other people too, think they are important. So I can see we don't have that many skeptics. At least they didn't make themselves known let me say it this way. So maybe it's not needed, but just as as an extra explanation, yes, moving averages are known to be lagging indicators, but there is a way, to use them as a good indication of trend direction. For example, they are very useful in that. And if you use them maybe with 2 time frames or 3 time frames, you get a very nice clue of where price is in relationship to maybe 1 or 2 moving averages, for example, on a couple of time frames. And you can see in that regard very nicely how price is reacting to its average. And there is some relationship price has with its average. So if you use that kind of analysis to determine what the trend might do on the time frame you're looking at, it definitely has its function, I think, when using and analyzing in that way. All right. Now, the advantage also is that they are dynamic. So if you use, for example, exponential, right, the recent price is incorporated in that indicator. So that's good. Trend lines, for example, are more a static example of a tool. So that's another advantage. We can use multiple ones, as I already explained. And I think it's a good measurement. Basically, what I think is the biggest advantage is the important measurement of trader psychology regarding Elliott wave, for example. It gives an indication, how far has a move extended away from its average, or how close is price to its average. And I think it does give a value, an indication of what could happen with the price. Because if price is extended too far away from its average, at some point or another, of course, people will not be interested in that trend direction because it's just exhausted. And of course, that's where a divergence convergence measurement like a MACD is useful, of course, to measure have we gone too far. But yeah, it gives a good indication of a trader psychology because a trend is powerful, but at one point or another, of course, we might want to think about taking profit because the likelihood of a continuation is just decreasing, right? So I think moving average also gives a good indication of that. So today's strategy, that was the explanation why I think they are important. Now I just want to quickly repeat what we said yesterday for the guideline we will use for the strategy itself. So the goal was to create a trending intraday strategy which capitalizes on small swings within the trading day. So preferably the trading rule would be geared towards the European session. It would be geared towards, well, I would say this way, it would be finding a currency that has a good trending impulse within that session you're actually trading. So if you're trading the yen, it might work fine during the Japanese session, but you don't want to trade the euro dollar in the Japanese session because the euro dollar on average hardly moves in a impulsive trending manner in that time frame, right? So if you're trading the euro dollar, you want to trade that in the European session. So depends which currency you're actually looking at, but we want to find a trending mode within the day, get in out within that day. That's the goal. So let's see what kind of steps we need to take to reach that goal. And we have to identify the likelihood of a trending impulsive move, where would we have that highest probability of that trending mode continuing. So first of all, which direction do we expect a trending mode? And yes, in which direction? And then what is the probability that it will continue in that direction at a certain point? And then we're looking for entries and exits, our trading plan. All right. So because we're looking for an intraday time frame, I'm using the 1 hour chart as my trend, and I'm using the 50-minute chart as the entry and exit chart in this framework. Okay. This gives us the more flexibility to catch 1 or 2 trades within the direction of the trend of the day. So that would be our preferred time frames for that type of settings. Okay. Now, what we're going to be using is the MACD, the ADX, and we're going to be using the Alligator as well. Now, most of you should know the MACD. The ADX, for those of you who don't know that, who were not by any chance last week in our webinar, it's the average directional movement indicator, and it doesn't indicate what direction the trend is, but it indicates how strong the move actually is. So it doesn't give a directional bias, but it indicates what kind of strength is behind the price action. So that's pretty cool because it gives you a different angle of price, and it gives you a different way of reading momentum. Okay, so the Alligator is our moving averages, and I'll dive into that in a second so that you have an idea what the Alligator is. Okay. By the way, if you have any questions regarding any of this, please feel free to stop me. I forgot to mention that at the beginning, but that's no problem at all. Gladly, please. If there's anything you would like to discuss, just let me know. So the Alligator Indicator, it's something that was created by Bill Williams. And let me just quickly go to the platform. If you go to Insert, Indicators, Bill Williams, you'll see Alligator. Okay? So that's how you can get the Alligator on your chart. It's very simple. It's just a standard tool within our, our technical analysis box. And if you click on that, because if we use red and blue, that will not be so useful and so handy, because then it would just be too much red and too much blue here. All right, good. So you can see then we get these moving averages on the chart. There are 3 of them. All right, and Bill Williams has more tools, by the way. The other one we'll put on is fractals. They're already on, actually. They indicate tops and bottoms. All right, and there's our other tools. He has a lot of cool stuff. He, as you can see, he's one of the, actually probably the only one, or you have some people who have their name connected like Gan, but it's one of the few who actually has a whole set of tools named after his name, so that's pretty cool for him. ADX, I got a question about the ADX. Yes, it's the average directional movement. You can find that as well here, average directional movement index. Indeed. Yes, Andre, that's no problem. He's asking, I'm not sure if it's going to be recorded, but if not, I will post quickly my email address so that you can send otherwise, because if I have to start writing down email addresses, then that's going to take too much time, and I don't want to hold everyone back by doing so. So I'll just quickly write down that email address. All right, that's it right there. I think everyone, no, sorry about that. I made one mistake in writing it down. That will be solved in a sec. Now everyone should be able to see my email address where you're interested in that PowerPoint. So this is the Alligator in any case. All right, as you can see, 3 moving averages. Right, that's very simple how you put that on your chart. Now, basically what they say is that all 3 lines, if they're intertwined, the Alligator is sleeping, and that indicates that there's no trend. That's how we want to measure the trend on the 1-hour chart, all right, by using these 3 moving averages, the Alligator, and if they're intertwined, that means that it's not a trending mode, and if all 3 lines are open and preferably expanding away from each other, the Alligator is awake, and that's when we want to trade it. So if we go back to a real-life chart example, we can see very simple that this area here, there's a lot of entwinement here, all right, and here, the Alligators are starting to get wider and wider, and that's the trending mode we're looking for on the 1-hour chart. Okay, this is the 4-hour chart, so I should move to the 1 hour. You know, it's something that you can look into, of course, on other time frames, but we had to focus. I mean, I wanted to focus on something more specific, so that's why I chose the 1 hour chart. I have to, you know, choose some guidelines here, some framework, right? But it's up to you if you want to do some testing and work on your own, which I definitely highly encourage, even with what you see today, to back test and do a lot of testing on your own, because hearing is, you know, is one thing, but seeing yourself is a whole different story, right? So the averages, moving averages, for those of you who quickly wondered what they are, they're actually SMAs. They are 1385, but they're shifted into the future. So that's why you see already these moving averages in the future. They are actually like placed forward. So that's a bit of a difference there with normal moving averages. You see the shift in them. They also take the median price instead of the close or the high or the low or the open, whatever. They take the median price. That's why they're a bit different. All right. So just in case you were wondering. Now, our goal is the 1 hour trending mode, right? It's the filter. The next task we're going to be looking for is the 15-minute chart conditions. So what are we looking for in the 15-minute level? Now, the alligator we want preferably in a trending mode. We don't want the average directional index to be too high, preferably below the 40, because why? What is the philosophy behind that? Well, if it's close to 50, for example, we are in a very strong trend, but most likely the trend is already behind us. It's past us. You know, the chance, the statistical probability that we get a lot of, you know, a high continuation, a big continuation, sorry, of this trend is lower and lower. I mean, we could still get a 10-pip move out of it, but it's not worth risking 30 pips, for example. So it's not something you would want to risk your money at once the ADX reaches too high a level, because the likelihood of retrace of that ADX and most likely price is getting higher and higher, and you don't want to get stuck. We don't want to get stuck in a retrace, and which might lead to a loss or a substantial waiting period, etc. So we want to have an ADX that's lower, so that preferably that's around, you know, above the 20, but below the 35, approximately below the 40, so that we are just at the beginning of the trend, and there's still plenty of momentum left in, hopefully, that, you know, in that trend that we anticipate. Okay, if the ADX has a nice upside angle, that would be a nice bonus, and, you know, if the MACD is in the same direction as we're trading, you know, that's a nice bonus as well. Okay. For entries, we're actually using, or in this strategy, using the fractal indicator and using a break of that fractal indicator by a pip or two. And a stop loss is the opposite of that fractal, but then below the stop, or it's the opposite, right? Okay, so that's where we enter, and that's where we put our stop loss. Okay, so this is for the entry and exits. We're actually using the fractals, and the moving averages. The alligator itself is a pure directional thing. Okay. Now, before I continue, I will have to ask you for a 1-minute pause, because I'm going to. My girlfriend went to the doctor, and she's back, and I have to open the door. She left 4 hours ago. We didn't expect that she needed the keys. I went with her, but unfortunately, I had to leave. I couldn't take her with the car because I have this webinar with you guys, but I have to let her in. Okay, so I'll be back really in 1 minute. 1 second. All right, I'm back. Sorry for that, folks. uh, Thank you. Some are saying how sweet. Really, I'm sorry about that, but that's part of life. But it was strange because she went, to the doctor. She was there 4 hours ago, so it was really. We thought that, it would be everything would be done within 3 hours. I would nicely drive her back, but I had to drive earlier, and she had to take the metro. But so sorry for that, but I hope you understand, of course, in this case. So we have this fractal, and I'll just show you the fractal quickly. This is this, and I'll make it maybe black so you can see it a bit better, all right? So you can see that it gives tops and bottoms, and that's what we're going to be using for the actual entry. So in this case, well, this is a 1 hour chart, but just for hypothetical purposes only, right? If we break this, and it's nothing wrong with using fractals, by the way, for the 1 hour entry as well, but I mean, that's not the strategy at the moment. But for the fun of it, or I can even go to the 15-minute here and show you like this. So if we get a break of this fractal right here, right, we have the moving averages lined up, and that's where we get our entry. Our stop is above this fractal, and then this trade is ours. All right. So that's the fractal. Now, stop loss is the opposite side, as I said. So if we're looking for a down move, right, we put it under the fractal, and the stop loss is above, of course, the fractal closest to us, okay, on the opposite side. And then for the upside, it would be the opposite. We would be looking for a fractal break of the upside and putting the stop loss under the fractal. Okay, I think that should be okay and clear for everyone. Thank you, Andre. Andre is asking how my girlfriend is doing. I hope okay. Let's see what the doc says. I'll ask her when we finish the webinar. I'll find out then. But thank you for asking. That's very nice of you. So the take profits. So we have the entries and the stop losses. She has some fever, by the way, just in case that you are wondering. So we have take profit here and trailing stop and moving our stop loss to break even. Now these are important things because they're highly connected to our psychology and how we trade. If we leave too much profit on the table, we might get nervous. If we don't get a winner, a big winner maybe once in a while, we also get nervous, right? It's part of our psychology that we have to master, but having a good money management also helps a bit. So what I like to do is split my trade into a few portions, preferably 3 or maybe even 4, and then I target, for example, 1.5 reward to risk, 2-to-1 reward to risk, and if you're more conservative, you might even want to go for a 1-to-1, which is nothing wrong if we're part of the trade to go for a 1-to-1. I wouldn't go for the entire trade to 1-to-1, but for part, there's nothing wrong with that. 1.5-to-1 is also a good ratio, especially on a 50-minute chart. That's definitely, I noticed something. You might want to go for 1.4-to-1 actually, funny enough, because of the spread, but something to keep in mind. Okay. So splitting the trade into parts and then the trailing stop, you can use the fractals, but you can also use actually, in this case, for example, the moving averages themselves. All right. In this case, you would have maybe a few pips above the moving averages because sometimes they just hit the moving average and then still continue. So that's something to think of and back test. Okay. But that's gold, so it's a bit difficult to say how much here. But if we look at a currency like this, maybe just 50-minute euro-dollar chart, we can see that if you trail stop with this, even the blue one or the red one, it won't get hit in a very impulsive move. Only the green one just slightly got pierced here through it, and then no substantial retracement in this impulsive down move. Right? That's what we're trying to catch. All right. So that's why I'm not looking for more than 1 or 2 max, because a third entry normally, the chance of this really continuing with a very extended move on a 50-minute chart before you get something like this, something of a chop, is not so high. I mean, yes, you do have sometimes really extended move for hundreds of pips, but those are more exceptions than something we really see. A normal daily move is, if it moves already 150 pips like this, it's already a lot, actually, 100 pips. So if you have moved already something like that, you do not want to be really looking for trades anymore in here, right? Yeah, so basically someone's asking about scaling in and scaling out. Basically both, but with scaling in at max, I would add a second trade. So at max, it would be an add-on here for one more trade, but I wouldn't be looking for a third. And scaling out, yes, indeed, in 3 or 4 portions, that's what I would be doing. We have a question regarding the downloading. It's something I am not sure where that can be downloaded. Oh wait, I maybe do know actually. Let me just quickly check. Someone's asking about where we can download it. 1 second. Let me see. Apparently it's Vimeo, but I don't know what the number is. No, so I'm afraid I can't give you that information at the moment. You will have to email maybe Admiral Markets. So they will probably know where, where you can do that, okay? So we have another question with regard to different time frames to apply to this strategy. I think, to be honest, you could find this strategy useful for any combination, maybe except the 5 and 1 minute. I would be very careful, but if you use this for a 4-hour and 1-hour setup, so you use the 4-hour chart for your trending mode and a 1-hour for your entry, I think it would do fine as well. That I think is something that wouldn't matter. Now, I mean, if you do it for a month and week, I don't think anyone would be interested in that, but I'm not sure if that would work. But but I think for 4-hour, 1-hour, and day and 4-hour, it would be fine. 15 and 5 minutes, I don't know. I would rather use the 5-minute and 1-hour still. Okay, so that's regarding the time frames. So so you get an idea. What I'm looking for is basically this type of moves. Want to avoid this, and trail stops, you can use the fractal. In this case, you would be trail stopping it. At first, you would move your stop behind this fractal, then behind this fractal, and you would get stopped out here. If you would use the alligator, whichever alligator you use, you would get stopped out somewhere here. And this is somewhere where you want to get out anyhow, because we're reaching the end of the trading day, the European session, which should be your trading session if you're looking at trading the euro dollar. If you're maybe trading the euro yen, it's a different story, and you could even use the Asian session for this. But that you wouldn't want to be trading this any later normally, except sometimes you do get a move in later New York. So that is a possibility, but I would be more careful. And once New York is closed, then you definitely don't want to trade the strategy anymore, because then the market is going to be consolidating, it's going to be bouncing up and down, it's going to be like this, and it's not good for a trending strategy. If you have a scalping strategy maybe that uses these ranges, that would work a lot better. Okay? So I hope that that's clear. That's a trading stop, and moving and to take profit. So one more last step is the moving stop loss to break even. What I'm looking for is when it hits 1-to-1. In most cases, I mean, you could also wait until your first take profit is hit, but that's what I approximately do. It's not something I really look at the market conditions, to be honest, and I look for it 1-hour chart, but this is just a guideline I use. Okay, so Usman says after it's done, yeah, if you send me that email to my email, I will let you know what the webinar recording is. Okay, Usman. Otherwise, just send the email to support@admiralmarkets.com. when it's done. All right. Ruben, yes, of course. Yeah, I know that you didn't want to get the week or month indeed. Regarding the smaller ones, well, I wouldn't use the 5 and 15. It's something you could test. I'm not saying, who knows. It's something that I've never looked at because I don't think it would be optimal, personally. I think that 15-minute world could be quite choppy if you don't use, 1 hour as a guideline when to enter. So someone's asking if the 30-minute would be better. Maybe. It could be. I never looked at that. So that's something, by all means, go ahead and try it. Maybe it's 30 minutes would be good with the 5-minute world. Could be good. I don't know. I've never looked at it. I always use one hour as my framework for this. But maybe it would be a genius idea. So I'll look into it myself as well, I guess. Thanks for the thought, actually. So something you guys will have to look into. I can't give any feedback on that because I've been using the 1 hour. So let's take a look at the example on the chart now. If we're looking at the 1 hour for our trend, you could even use, if you wanted to be a bit more conservative, by the way, you could use the 4 hour and the 1 hour to be both pointing in one direction, and then use the 15-minute world. Of course, you're going to lose some signals, but those signals that you do have left are a higher probability. So, it's something you can think of. It's how you want to approach the market, basically. Are you looking for more setups, or are you looking for more secure setups? If you're looking for more secure setups, you might even use more currencies, right? Because you're not going to have every day the euro dollar is not going to be lined up with a 1 4 hour trend going in the same direction, but you can scan other currencies, for example the pound, the EJ, and see if they have that setup, and then focus on that one on the 15-minute world. So, or if you rather stick to one currency, then you might want to be a bit looser and only focus one time frame for your analysis, and then the second one lower for your entry. So that's something, are you more that you have to judge for yourself what kind of trading personality you think you have and which style fits you better. Okay. And if you don't actually have if you don't like trending modes, of course, well then this strategy is not so good for you, but maybe you'll still learn something from it because this is really geared for that trending, catching that impulsive trend mode. All right. Let me just quickly change the colors here. I don't like these colors that much here, so that becomes a bit clearer. Yeah, that's a bit better, I think. Cool. Now, this is the 1 hour chart, and this area here is actually going counter trend on the 4 hour chart, because the 4 hour chart is still is still up right here. That's the upside. You can see that this area here, we had actually 1 hour and 4 hour both aligned to the upside. All right, so that was maybe ideal. This part was ideal for trading it to the upside because both time frames were really strongly aligned. Even the day chart was to the upside, right? So you had all this momentum going one direction. This maybe not so ideal because you had the 4 hour was still upside, but even though the trend on the 4 hour was upside, you can see that the 1 hour momentum, the trend was downside, and you did have some nice trades, impulsive moves down on the 50-minute world. So just to confirm that on the 4 hour chart, see, okay, well, we had a switch over actually a bit faster than I expected. Here you can see we already had a turnover on the 4 hour chart. So that's when we had a 4 hour, the price was under the alligator already on the 4 hour chart. Probably on the day chart it was still an uptrend though. All right, so you have, and that's of course something you don't want to overanalyze maybe sometimes, because then you'll see uptrend on the day chart, downtrend on the 4 hour, uptrend on the 1 hour, So you want to be careful with that too, of course. But maybe you can also use that for analysis. So let's look at now the 1 hour chart, and let's focus on that piece up first, and then go to the 15-minute world. Okay. Wait, this is different red lines. Where's this? Ah, this part, I think it is. Yeah, cool. So we had an uptrend from here on the 1 hour chart, right? So what we're looking for is the European Open, more or less, which is approximately here, right? Here where I have my cursor. Yep, that's revisible. So what we're looking for is a break of the fractal, right? That's this one originally. Let me put a circle there. Then we get another fractal, so we're looking for a break of this one, right? And you can see that once we get a break, we have price above the alligator, right? That's what we're looking for as well. And we have the MACD in positive territory. The ADX is just about to cross 20, so that's fine. All right. This is also just more of an extra that we're not taking a trade when it's about to be 50, or if it's very weak and it's no trend at all. But with the European session about to start, or actually well in its way, 2 hours, we can expect a impulsive move in one direction or another. And if it's the upside, that's when we want to trade it, because we're not looking for downside. If it does, if it does go to the downside, we're just going to let it pass by, because the 1 hour is an uptrend, the 4 hours is an uptrend as well, by the way. But because the 1 hour is an uptrend, we're looking only for buys on the 15-minute world. So what we're looking for is a break of this fractal by 2 pips. That's our entry. Our stop loss is either this fractal, or if you think it's too close, you can use the second to last fractal. That's something you can play around with. If you use the it's only a few pips difference anyhow. So if we put a few pips under here, that will be something like 18. Our entry is 36. So it's like 18. So let's round it up. It's a 20 pip risk, something like that, between 15 and 20. And the initial first move goes all the way up to 63. So you can see that's something like 27 pipper. That's quite common for the first initial burst to move something like a 1.5, a bit between 1 and 1.5 reward to risk ratio, maybe something like a 30 pip move at first, and then you get some retracement and then a continuation. That's quite typical. So don't worry about that. The chance that it continues is quite high, and then you can see we get another move. Now let's look at the second scale-in. All right, let's see, is that worth it right here? Our stop would have to be here. All right, now let's take a look at the ADX. The ADX is climbing and it's about 30, so that's not too high. The MACD is positive. We have an open alligator. So in this case, yes, I would be looking for a fractal break here. Maybe not this one, because I know that normally we get a bigger retrace after 30 pips, but maybe after this retrace, and then this one I would take. But you can see it didn't go too far. The stop loss was 30 pips, and this one went only 25. So we would have clicked out the trade somewhere in here because of the time filter we have when the session ends. Okay, and we would have some few pips profit. And the other one, of course, would be nice profit, right? So those are the two trades, and you can see that the currency then goes to sleep. Basically, the rest of New York and Asia, moving just a bit up and down, doing no direction at all. So we have the next trading day, and we can see that we're looking for a break of this fractal. This was prior to European Open, okay, just before European Open. And our ADX is a bit high, but it's still under 35 actually, so that's okay. It's 32, 31, so that's okay. MACD is in positive territory. It's still climbing. You can see the angle here. So that looks all okay. Our entry is at 20. Our stop loss is at, again here, like a 15, 20 pip risk, because we're putting our stop loss here, right here, and our entry is here. And we can take profits along the way. All right, so it depends. If you're using the red moving average, you would get stopped out approximately here, for example. And this is where the session ends. And you don't want to be in the trade anymore if you're an intraday trader. All right, you get your 60 pip movement basically, and that's it. You know, and that's all we should be, you know, looking for on a day-to-day basis, because that's something the currency kind of normally always gives you, except maybe Mondays and Fridays, by the way. They're a bit more trickier. You should be aware of that. Tuesdays, Wednesdays, Thursdays are more solid, are more reliable for intraday trading. And these movements are very, you know, quite often they happen. And if they go with the trend, they should go something like 60 pips. So if we have a 20 pip stop, I mean, if you get a 2.5 to 1 or 2 to 1, that's already quite a lot. And 3 to 1 is exceptional. That's a very, very good trade, I think, personally, to close within the day. In this case, the max we would have gotten here is a 3 to 1, and then you would have had right at the top here. Okay? So let's move on now to the next day. You can see that this is a bit choppy day. This is the 28th of January. Let me see what days these are. Oh, that's a Monday. And you can see right away, that's why I look, because, you know, this is stuff that you have to be careful of. It's a Monday, and it just doesn't go anywhere. But luckily, you can see the difference. For those of you who are good observers, we are here in a trending mode with price above the alligator. And what are we here? Price is under the alligator. Price is, you know, going against the alligator. We want the price not only to be above the alligator, but we want it to be kind of like already kind of like above the, here's the price, this is the alligator, and then we want it to kind of like hook back and bounce off it. That's the best setup, because if the price is punching through the alligator, it's a bit weaker, right? In this regard, the alligator is actually acting as resistance and not as support. When the alligator is under the price, it's acting as support. And you can see that once it punched through a bit, it came down again, punched through a bit, came down again. And before you know it, when the moving average is finally turned over, actually, which is here, right? We're looking for a fractal break here, and price never broke that high. And then the end of the trading day came. So we had never had an entry, despite the fact that anyhow we are warned that Monday is a day we want to be more careful. We never had anything that met our criteria and justified an entry based on our strategy on this day, on this choppy day, which is good, because if you can avoid not losing on choppy days like this, and you know, getting those 1 or 2 entries and scaling out on the days that you do get a 50, 60, 80 pip move, then you're hitting home runs. All right. Yeah, sure. We can take a look at the Aussie dollar. Someone's asking for the Aussie dollar, and that's no problem at all. Very cool. In fact, actually, we're running a bit out of time. I have to stop now because we only have 50 minutes, and there's some other stuff I wanted to talk to you, some extra tips. So I have to stop there. But you can see 2 examples of let me make this a different color so that it's easier for you to see, because I know that white's easier for everyone to view the chart. Basically, you've seen 2 days where we had a nice trending mode, which gave us nice pips in the direction of the trend. You've seen also a choppy day that we were nicely avoided. I'm not saying we can always avoid every choppy day, but if you use the Monday, Friday rule and be careful, maybe risk less or nothing at all, trade Tuesday, Wednesday, Thursday with these guidelines and rules, you will do, I think, fairly well. And of course, don't forget to do your, I'm totally doing the wrong color here. Don't forget to do your own testing on this, because that will be the most crucial, actually. All right. So this is the Aussie dollar. Someone asked me to look at the 4-hour chart. And someone sold here at 334 right here, I guess, and is asking, like, wondering what my strategy here would say. So let's put that MACD on. Let's put the average directional. Let's put the alligator on and see what it says on the 4-hour chart. We can see that, okay, the 4-hour chart price is actually going into the alligator here. It's a bit of a chop, but the alligators are showing more. Yeah, they're now. It's really a mess in a way because price is above the alligators. The alligator is about to turn here in the future. The day chart is definitely down. So this up move looks like a retrace. The question is, how far will this retrace go to the upside? Is this all, or just still going to retrace a bit higher? Let's see the 1 hour. You can see the 1 hour chart is already acting as a support here. Price is already above. So 1 hour is more or less in the up mode. The ADX is quite high, 45. And the MACD is maybe turning here. So there was quite a bearish 1 hour signal here. 4 hour is iffy in a way. MACD is still just barely bearish though. Down chart, day chart is down. So this is one that I would say the downside looks, good on the day chart. The question is how far will, because price action is recently on the day chart quite bullish. So the question is, I guess this fractal right here will be important. If we break above that, maybe we're going to be retracing higher. If we respect this fractal, this top, then we could be continuing lower. So it's a bit tricky situation at the moment, I would say. The 4 hour is a bit of a toss up here. If we put one more indicator I want to show you guys here. You can see that the long-term moving average, what I use, is showing more downside. So this is definitely a retracement. The only thing is, will it stop here, or are we going to, in Elliott wave terms, make a bigger retracement, maybe up to here? So that's the only question in my mind now, because this is still pushing up. Where will it turn? Will it turn here, or will it turn here, or maybe here? But it looks, the long term looks downish to me, the Aussie dollar. The question is, will it happen here? That's a bit tricky now to say. So sorry, that's all I can see at the moment. I'm on the sidelines in the Aussie until it reaches a bit higher. I'm looking for a bit higher retracement before I'm looking to sell it personally. But so just because we're running out of time, we have 11 minutes. I wanted to show you a long-term moving average, for example, 200 EMA that you can use on your chart. All right. I mean, this is up to you basically what you use. 100, 150, 250. Here I use 200. You can see it's very little difference. But if you add one of those moving averages with the alligator, you get an additional clue of where price is in relationship to its average. You can see that this is 200 EMA I'm using now, Andre. You can see that when price is under the alligator and the alligator is under this long-term black moving average, that's like the optimal setting. All right. Now, not that it didn't work out pretty well here when price was under the alligator and the alligator was still above the long-term moving average. It worked out pretty decent there. But sometimes you can see that the long-term moving average actually acts as a support, and before it crosses over the long-term moving average, it's a bit more choppy and corrective. So one more additional filter or maybe guideline I use personally, so I wanted to share that with you. All right. So let's put that on the euro dollar as well and see how that would have turned out with those trades. And you can see nicely, you see that when we're trading here, from here, sorry, those 2 days, right, that everything was lined up as well here too. And on the 1 hour chart, sorry, that's this part, you can see everything was lined up too. All right. Now you see the difference between this piece and the piece before that, because the long-term, although price was under the alligator was above the long-term. So it depends how risky you want to be. If you want to, take more risk, you could take these two, because this one worked as well. But sometimes these moves, when price goes back to the long-term moving average, they're a bit more choppier and a bit more corrective than really with the trend moves. So that's why I like to have that long-term moving average on my chart. Okay. Let's see. We have a question here regarding the server that is on New York, and if Admiral Markets has a London server. I am not sure. I can't answer that question, so because I don't know, to be honest. The best is to email support with that, okay, or to chat. I think, or in any case, email, because I'm not aware of that regarding if the service can be changed. Sorry for that, but I don't know. The other tool I wanted to show you is the Gator oscillator. Okay, so we have, besides these tools, the ADX, the MACD, the long-term average, the fractals, and the alligator. Now I know these are a lot of indicators, and if you're not that much of an indicator person, I understand. If you like, pure price action, skip the Gator oscillator. There's nothing wrong with skipping that. I don't want to confuse you too much. If you, then again, like indicators, you might want to be interested in this, because the Gator basically, it shows a value above the zero, and that shows the distance between the fastest moving average and the medium moving average, and the histogram below the zero line shows the difference between the medium and the long-term moving average. I think it was. No, it's the other way around. Sorry, because I have different colors here than on my own chart. Sorry. This one is for the medium and long term, and this one is for the medium and short term. Okay, so let's go back now. You can see the zero line. All right, I'm zoomed in a bit, right in the middle. And what they show is the distance between this line here, these two lines for underneath, and these two lines, the blue and the red, for above. Okay? And you can see where it accelerates and where it decelerates, right, for an additional informational purposes. So I don't think it's the most important factor. I think that the ADX and the MACD are the most important. But if you like something, to learn something new, and you think, wow, why not? I see how it goes. Maybe this is a good one I recommend for you to experiment with. Okay, because it's kind of, I thought it was cool. Indicator. But if you're not an indicator person, then just skip this one. Okay. The last thing I wanted to tell you, with 6 minutes luckily still, is the risk and money management. Now, for example, as I already actually said a few minutes ago, some things you could think of regarding your risk and money management. Of course, there's always a max risk you want to take, but within that max risk, you could think of, for example, taking little or no risk when the price is going opposite back towards the moving average, the long-term moving average. Okay, let's show an example on the 1 hour chart. So, it's up to you. You could even skip any trades here, or you can take less risk on 50-minute breaks to the downside. Yes, price is under the alligator here, but it is going back to the long-term moving average. In this case, it was very impulsive, so it would have worked fine. But in other cases, like here, you can see it's less desirable. So maybe taking less risk, depending on how you see the market. Okay? Yes, Piotr, he's asking if I use the default settings for the alligator. I do. For those of you who are wondering, I do use the default settings. But you can play around with it, I guess, but I just use the same. I mean, I'm sure that Bill Williams did a good job with this, and I find it very very useful for myself. But maybe if you optimize it more, that you can get it a bit better. But for me, it's fine. So that's something to think about. Risking less maybe when you're going back to the long-term moving average, risking less when the Gator, for example, is accelerating or decelerating. And you can also think of the second scaling, that you really want to take less risk on that one. Your first trade normally has a good 60 pips to go if you caught the direction of the trend and you don't have the unfortunate unluckiness to catch a ranging day. As I said, there should be good filters though to catch many of those ranging days and not enter those days. But if you do, then that's just a bit unlucky. But if you do catch a ranging day and you're up in pips and you want to think about a second scale-in, maybe take a bit less risk on the second scale-in too, because the chances of another 60 pips from the second scale-in are just decreasing. You want to also maybe take profit at a 1-to-1 because the remainder of the move, the impulsive move, the size is just decreasing. So you might want to take less risk on that too. All right, so those were some extra tips on that as well. Yeah, this is luckily all the material I wanted to go through. We have a few minutes now still left for questions and answers. So please go ahead and let me know. Thank you for your attention. And if there are any questions, just type those in. As I said, Admiral Markets, please take a look at their Twitter, for example, and the website, for those of you who don't know, fundamental analysis, technical analysis, wave analysis. I'm a big Elliott wave fan, so and I use that very actively in my trading. So I don't only use this, by the way, I use the Elliott wave, but because I wanted to focus on something more specific, and I know that a lot of people think that Elliott wave is too subjective, I wanted to make it more subjective. So I didn't mention Elliott wave at all, but I'm a big Elliott wave fan. So if you are as well, you can find wave analysis here. Let me see if there are any questions. Some thank yous. You're very welcome. I hope that someone has learned something valuable, even if it's just a piece or two. And if you like everything, that's even better. But I hope there was some value in this. I think if you use this methodology and you find a discipline to really stick to what you prefer as a trader, what suits you, your psychology, it will work well for you. EJ is going a bit counter-trend, this downside move indeed. The next webinar is next week, Tuesday. A bit later, the usual time. Today was a bit earlier. Because of my personal schedule here, I couldn't make it 1.5 hours from now. Next week is 1.5 hours later, then half an hour from now actually, just as usual. And it will be about using concepts of physics. So something different maybe. It sounds fancy, it's not, it's maybe not, but I think it's an interesting topic in any case, okay? I find it very interesting in any case. So I hope you'll be there too. I think it's well worth it personally. So I hope to see you then. Let's see, one more question by the way. Yeah, I think you can use these for swing trades as well. I use different moving averages for swing trades personally, but I think if you use it for 4-hour and day chart, it should work fine. But please take a look. For that yourself. I use this set for the intraday personally, but I'm sure it will have the same results for swing trading. But something you want to check into. So, but I think the methodology, of using one time frame for analysis or two, and then one lower for entry is really cool. So. Someone has a question on indicator ticks. Okay, not sure where your question is. I don't see your question, Philip. So let me write my email address again for those people who are looking for it. There's my email address. All right, for those of you who want the PowerPoint, um, please send me an email. You get the PowerPoint. And in that case, I think I answered all the questions except Roman's, but I don't see any question. He just said, I have a question, but I don't see the question anymore after that. So can't help him there. Philippe, no problem. You're welcome. And the recording of the webinar, the best is to email support, where you could access that recording. I think it is recorded, so if you email support, they'll tell you where and how you can access it, okay? So I'm going to wrap it up now. I thank you very much for being here. I look forward to see you next week, and in the meantime, I wish you a very good trading, okay? Thanks, everyone. Cheers.